Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
I can hardly believe we've gotten to the 50th episode of this podcast at just 2 episodes a month. We've also surpassed 10,000 downloads and are still growing with a small budget and not devoting full-time hours to the pod like some people can and do. I have people to thank for this. First, my marketing and strategy consultant, I think of her as my producer, Steph Fuccio, and please see her credit in the notes below. And of course, to all of you listeners, new and continuing, a big thank you for listening to my voice twice a month. I have limited time to devote to this pod, as I am still a full-time bookkeeper, but for the first time in 30 years, I'm starting to reevaluate things in the bookkeeping practice. I recently wrote an article in Substack about the thought of semi-retirement. If you haven't subscribed yet, why not? And please do. And secondly, now I am beginning to see 2 trends in my practice that have started in 2024 and now continuing into 2025. First, I had one client with 2 businesses who went bankrupt in 2024. I knew it was going to happen at one point, since they didn't listen to my and their accountant's suggestions, but just didn't know quite when it was going to happen. So one client, 2 entities, lost. I was charging them a lower hourly fee since they were struggling almost from the beginning of 2015 when they started their businesses, and they became more and more stressful in terms of bookkeeping because of all of their many loans and 7 or 8 credit cards to reconcile every month, as well as 3 or 4 bank accounts. And they were slow payers. I do tend to have patience with the slow payers, which I know I really shouldn't. It's one of my business faults, for sure. So there was a partial sense of relief when they announced that they were going out of business. And getting W-9 forms from them in a timely fashion was always a nightmare. But somehow, I helped keep them out of an audit even though they had never showed a profit in any year in 10 years of being in business. I also had a client who I had been doing bookkeeping for since 2014 move on to a new accounting firm and wanted to keep everything in-house. He left his tax preparer as well as leaving me his bookkeeper. He wanted his books done by the 10th of the next month since he had 3 entities, all related to each other and all more complicated than they used to be, hence more time for me to put together. So far, 2 clients, 5 entities lost. I also had another client who never gave me access to their bank account, and they were supposed to send me bank statements and credit card statements every month. In 2024, I stopped emailing them to ask. I had other things to do and other companies to do bookkeeping for. In December, my contact there called me and told me that they found a new bookkeeper who specialized in their field, which was art. Another stressful client lost. Now, 3 clients, 6 entities lost. But I'm not complaining. Losing stress with lower-paying clients isn't really a bad thing. I walked away from 2 more clients who did not give me access to their bank and credit card accounts. So now we're up to 4 clients, 8 entities gone. So some of these losses were planned and some were not, but I knew that I had new clients who were in the wings since I didn't have the bandwidth to get them done. Now I do have the bandwidth. So all of these clients lost have been already replaced within about 5 minutes flat, which I can't seem to figure out at my age if that's a good thing or a bad thing. I have taken on a large project that I finally, after 2 months or more, received all the bank statements dating back to 2017 for a now closed bank account. Their books need to be totally redone from the beginning. They are accrual-based, but I will be recreating the books on a cash basis for prior years, but after catching up into 2025, adding accounts payable and accounts receivable to the mix before handing the books over back to them and their bookkeeper, who I will train. I have had a client since 2017 with one LLC, 4 bank accounts, 2 credit cards, and to keep with the holidays, and a partridge in a pear tree. However, they were not all for the business. Each account had and still has personal expenses, business expenses, and mixed in expenses for 2 properties that they own as separate LLCs. I entered the separate LLC properties and created equity accounts for them on the business balance sheet and separated those expenses from the profit and loss of the business. It was painstaking from the beginning, since I entered most everything and asked my accountant and then recategorized them based on their answers to spreadsheets that I sent them. I started in 2020 entering 2017 data since they were not yet filed. Now I'm just finishing 2023, and hopefully by the due date coming up in April, they will be able to file. And then on to 2024, which will be on extension, expecting to be done with that during the summer of 2025. And I was beginning to let out a breath of air when they came to me and asked me if I was interested in being the bookkeeper for yet another company that they owned, since they didn't like their current bookkeeper. Since it makes perfect sense for me to do that because there's a loan between that entity and the entity that I'm currently working on, I am taking it on. And I'm charging an hourly fee that is acceptable for both parties and on the higher end of the spectrum. Starting in 2025, when I get there, the 2 properties will have separate books. The personal expenses won't be input at all. The business LLC will have a separate set of books, and the entity that I'll be taking over will also be separate. Different credit cards and bank accounts, of course, for all the entities, and no more mixing everything together. I also have another client who owns a historic bar that has been around close to 200 years. To celebrate 2 years from now, he wants to open bars in both New York City airports, JFK and LaGuardia. I suggested that each new bar should be new LLCs, and the CFO agreed. So another client with soon to be 3 entities, 3 different QBO databases, and 3 times the work. The point of this episode? Bookkeeping is changing with AI being introduced, but businesses are also changing in a major way. It seems like suddenly there are business owners expanding their businesses by creating more entities, not just locations, all under the same corporation or LLC. So I see a trend in my practice going from having 100+ clients diminishing down dramatically, since each client could now have 2 or 3 entities. So the number of clients would go down to maybe 15 or 20 tops, each one having multiple entities, so the workload would roughly stay the same. And financially, the hourly rate would be consistent throughout my practice. The conundrum is that I never really wanted this. I like the idea of having dozens of clients So if some are lost by attrition or closing down their businesses, or I decide to walk away from some of them, it wouldn't hurt me financially. That has always been a sweet spot for me personally. But I do see the change coming. In a year from now, I will have fewer clients, but just as many sets of books to do, which means that I have to pick clients carefully and try and come up with a plan on how many I can comfortably handle. Having separate entities for the same client also means transferring money between entities, and sometimes one entity would purchase inventory from another entity if needed. That would be a customer invoice from one entity and a vendor bill in another entity. Having less clients could mean more income as I get into my 70s, which is only another 2 months away for me. How many people can say that they made more money in their 70s than at any other time in their working life? I'm lucky and I'm cursed, I guess, but mostly lucky. I recognize that fully. I'm lucky to be able to do what I do at my age, lucky to have what seems to be an unending supply of potential clients, lucky to have a good reputation with accountants and tax preparers, lucky to have this podcast with all of you listening, and lucky to have Steph in my corner. She is my reality checker, cheerleader, and all-around podcast guru. If anyone wants to start a podcast, contact her. She's the best. Next episode, back to tax season stories of specific situations that I know I will run into. I'm recording this before January 6, 2025, when I expect tax season to fully hit. Stay warm and dry and get your 2024 bookkeeping done soon. Deadlines are coming fast. Be coming out in your Android, iPod, or tablet soon. I'm Paul Rosenblum.